It is 10th of February 2026, and in today's version of the Daily on Wiseversa, we talk about AI, data centers, trade talks that Uncle Sam is considering, and the usual news. You're listening to the Viceversa's daily podcast, a show where I, that is Zim, explain the major happenings from the world of business, finance, economics, and technology of the day. My coverage is mostly on India and around India from the globe. That is, things that matter for India. So get ready with your headphones and let's get started for today's podcast. Data centers and artificial intelligence have become a hot subject these days. My apologies for using the word hot, but a hyperscaler, that is a data center with some advanced capabilities, including AI, have caught the attention of investors and almost everyone. Hyperscalers are like the bumblebee from Transformers, or at least they are marketed to be. Prominent papers worth their salt, sugar, pepper, and whatnot say that investments in AI from just four companies alone is going to be worth anywhere from 610 to about 670. That is dollar billions. If you read the Wall Street Journal, the number is about $640 billion. A British paper puts it at about $670 billion, and some brokerages and equity for research firms have pegged this number to about 610. Numbers are good, but context is king. That number, that is an average of $640 billion in capital spending by four American companies, is the same size of money as India's recent union budget. Don't scratch your head. I'll explain the very context. You see, India's union budget, that is for 2025-2026, which was recently announced on the 1st of this month, stood at about rupees 54.5 lakh crores, or approximately $630 billion. Now, $1 billion is approximately rupees 9,000 crores as on today. But those major US firms that we're talking about, that is Microsoft, Meta, that is Facebook, Amazon, and Alphabet, are ideally considering a capital outlay program which is more than India's annual union budget. Where is that money going? These four companies, where are they spending in? Well, it is said that it is currently going into AI infrastructure and data centers, which are considered integral to this entire infrastructure, are likely to see some action. You would also get to see a lot of action in purchase of GPUs or in purchase of other items, which remains integral or crucial to the entire dream of AI infrastructure. So you get the gist of it, that four big American companies, Microsoft, Meta, Amazon, and Alphabet, are spending top dollar or top money. Now, today's story in this particular podcast, I will beg your apologies. Once again, there's too many numbers that I'm going to be dropping in, because usually on a podcast without a video feed, it's very difficult to catch hold of those numbers. So it's slightly going to be long, but I'll try to simplify what these numbers mean. To give you better reference or inference, $670 billion is about 25 times the cost of America's Apollo programs between the 1960s through the 73 time period. Okay, I have not done any inflation adjustments as such, but if we are to adjust for inflation, America's much touted space program, as on date, the calculation suggests would be about $260 billion. And that $260 billion is what Uncle Sam was spending. Today, what we are talking about is just four companies alone, which are going to invest nearly three times of America's Apollo project into AI. So that tells you the kind of seriousness that American companies are looking at in this entire AI race. Okay, and mind you, we're just talking about four companies and their capital outlays. We're not talking about other companies who are joining in the bandwagon. Okay, so yes, great numbers, fantastic. But what more? Well, there's at least three peculiar observations for a person to make. As on date, there are fewer criticisms to the entire AI infrastructure push or the maddening manner in which money is getting raised. You see, we often talk that AI is going to cause environmental concerns, AI is adding to consumption of resources such as water, resources required for creation of electricity. But those kinds of criticism are far very limited to the kind of optimism and hope that you get to see in the entire AI industry. Most of the money that is going to be raised for this AI infrastructure, there is very little discussion on how much of that money is coming into labor markets. Most of it is just about infrastructure. And since there is little criticism, the likes of Jensen Huang of Nvidia, OpenAI, Claude, Elon Musk, everyone believes that AI is the next future despite the several risks to jobs. Last week, we already saw what AI could do. The catastrophe or SaaSpocalypse witnessed in software or software as a services companies. That trend, the fear around jobs being lost out, very much exists today and still affects global companies that are playing in the SaaS space, but very little discourse is going around on those lines. Second major observation is that amount, that is $670 billion, does look kind of strange. Allow me to explain why. It's first of all larger than America's space programs, which I already explained to you. But it's equally curious to understand where is this money coming from? Because it's not that these four companies have $600 billion in their coffers. So are companies investing from their own pockets? No. Surprisingly, there is a curious trend. Individually, except for Amazon, none of the other companies had revenues beyond $670 billion. Alphabet's revenues for 2025 were about $400 billion. Meta was about $200.97 billion. Microsoft was about $305.45 billion. Amazon was the only one which had revenue numbers, bigger than $670 billion, which is Amazon had revenues which were above $700 billion for the financial year 2025. I'm sorry, the calendar year 2025. So how are organizations planning to get that kind of money to pump into AI development? Some folks believe that there might be expansive borrowings. And while you're listening to this, there are certain concessions also. Okay, the US administration is learned as offering certain tariff concessions to select firms keen on importing those expensive GPUs from around the world. It's also interesting to note as to what kind of activities these companies could do in favor of raising this kind of money. Remember, all of them are listed entities. In the case of Alphabet, some nuances of this capital raising activity, some of them, okay, they're already out. The creative financing that Alphabet is planning on is a one of its kind 100-year bond. A bond is like a debt obligation where the issuer, in this case Alphabet, would pay regular interest to the lender and would return the original value of the investment upon maturity. But it's for a time period of 100 years. The last time when somebody remotely associated with such a technology issued bonds, it was the technology company called Motorola back in 1997. Some analysts believe that a 100-year bond is like intense speculation. Others warn that it's a signal of excessive valuations. And then there are some cautionary tales also. For example, while the exact details of Alphabet's 100-year bonds are yet to be released, it holds a very eerie resemblance to US retailer J.C. Penney, which saw a bond release sometime in 1997. After issuing those bonds, J.C. Penney survived for barely 17 to 18 years and they filed for bankruptcy. When they filed for bankruptcy, the value of the bonds turned down. A small disclaimer though, that it's not strange for companies to issue bonds with that longer tenure. Coca-Cola, Walt Disney, there's a good number of companies that have been there, seen that, leveraged that kind of money and done that. But don't worry, there have also been cases wherein bonds, there have been plans of raising them for 1000 years. There is even one currently active bond in fashion, which is currently active for last 400 years. So the outcome or the investor interest with these bonds should perhaps tell us a little more about where the future of AI lies. The choice of the currency that Alphabet is going to raise these bonds is equally interesting because they have not chosen for a US dollar alone. They've chosen for four different reserve currencies, but the bulk of it is going to be denominated in sterling pounds. So it's also interesting why this kind of a choice has been made. The third, I told you there are three important bits. So this is the third bit. The third important bit about the current AI build out phase is all the more concerning and interesting. You see, in India, we have started talking about how we should be building data centers across the country. There is a policy which gives tax concessions and tax swaps. Around the entire world, the entire AI and data center space seems to be divided into two camps. One camp clearly believes that we should have more data centers, we should have more hyperscalers, and from there we can leverage AI and build better products or services. Then there's another camp. Now, this particular camp believes that such facilities in outer space beyond planet Earth are much better. I will not give you brownie points for guessing who that special person is for thinking that data centers can be taken out in space. The person is Elon Musk. Elon Musk has been giving the thought of data centers in space a serious approach. Last week, we saw that he had merged SpaceX with XAI, two of his companies, and which is likely to get him closer to a valuation of $1 trillion, but that kind of clubs the entire space and AI capability into one cohesive unit for the investor. The valuations increase, so it's better for him to get some leverage from it. Okay. Joining Elon Musk in these kinds of thoughts is China. You see, cheaper and abundant solar energy in space and colder climate for AI data centers to operate in space have already caught the attention of the Chinese. A white paper from China, which I'll link in the YouTube and Spotify comment section. According to a white paper from China, there is already a lot of serious effort. Last year, that is 2025, this white paper noted that China was putting in significant amounts of computing power into orbit, outer space orbit. And there was a three-body computing constellation from a company named ADA Space. It was a first of its kind launch in May 2025. Now, this company called ADA, which is based out of Chengdu in China, their plan was an orbiting AI infrastructure made up of at least 2,800 satellites for accelerating intelligent applications for multiple industries. So they are talking about things such as processing other spacecraft's data, performing energy intensive computing tasks, but not on planet Earth, outside in space. And how does it help them? Well, solar power is abundant in outer space. The climate, the weather is kind of conducive. Now, this particular white paper also suggests that China's Aerospace Science and Technology Corporation could be building something much bigger during the time period of 2026 through 2030. Clearly, there is a bigger race in the AI world. At one end, tools like Anthropic's cloud insist that there would be no jobs for coders in the coming 6 to 12 months time period. At the same time, countries like China have started focusing intensely and passionately on space tech. And then there's the finest technology companies who are willing to bet for nearly 100 years. So what is central to this entire AI race? Is it the ability to launch more satellites? The ability to get natural resources like solar energy or cooling techniques? Is it the ability to deliver compute resources like GPUs or graphic processing units? Are frameworks unique when you're setting up AI? Is it tax holiday? Is it the ability to get science geniuses and PhD holders? What exactly? Well, there isn't one clear answer. Public responses are hence also divided. Some call it an AI bubble, some call it as an opportunity, some believe it is a lunatic prophecy. For the record, when America decided on the big Apollo mission, a big argument was rather than sending a man onto a dead rock in space, it was better to feed the hungry. AI was also trending in India yesterday. An AI summit that is expected to be organized in New Delhi had turned so popular that it resulted in a price surge in hotel bookings, prompting users to complain of price surge tactics. Moving on, alongside AI, there have been some observations on trade deals reported widely and discussed widely today. Among the notable developments are Taiwan's retort to America's trade deal. Taiwan's lead negotiator was reported as disagreeing to a target set forth by America as part of revisions in trade deals. America had suggested Taiwan to relocate 40 to about 50% of their chip capacity to the US in order for a tariff cut of 15%. The lead negotiator said that shifting of the chip capacity was impossible. There are, of course, other statements and suggestions that the Taiwanese and the American negotiators are still working on. Every time one talks about trade, one believes that such negative reactions should be avoided. But these negative aspersions have been a part of trade agreements for quite a long time, and generally countries do give out an honest account of what is possible and what is not. Speaking of trade agreements, Bangladesh confirmed that it had structured a new agreement with America. Listeners should note that Bangladesh's tariffs have been affixed at 19% in exchange for concessions for American goods and enterprises. The White House was quoted as saying in a report that Bangladesh had agreed to provide significant preferential market access for US industrial and agricultural goods, including chemicals, medical devices, machinery, motor vehicle and parts, soy products and dairy goods, beef, poultry, free nuts, and fruits. The report also said that Bangladesh had agreed to uphold internationally recognized labor rights and strengthen environmental protection. With this latest agreement, tariffs on Bangladeshi goods into America have been revised from 37% to 20%, and now it is 19%. Moving on, let's look at the big developments that caught the attention of the markets today. Kalyan Jewellers has officially approached SEBI, that is the market regulator, claiming that their stock is being manipulated in the derivatives, that is futures and options segment. India's Steel Ministry signed MOUs or Memorandum of Understanding worth rupees 11,887 crores with 55 companies. This is part of a broader push under the production linked incentive scheme to boost domestic steel manufacturing capacity and reduce import dependence. Indian Airlines saw a 32% drop in aircraft inductions in 2025. In 2025, barely 95 aircrafts were inducted into airlines. Such a slowdown in induction indicates some sort of a logistical trouble for Indian aviation. The profit of public sector banks in India grew at 18% to a record 52,603 crores in the third quarter of fiscal year 2026, that is the December quarter. This has been attributed to a notable result announced by the State Bank of India. EPFO withdrawals on UPI could soon be a possibility. The Employees Provident Fund organization was already testing an interface for EPFO withdrawals with UPI. An interface could be ready by April 2026, and it could allow transfer of a portion of pension fund and PF savings directly to a bank account using UPI. Adani Energy is learnt as having secured financing from a consortium of Japanese banks. This is a long-term financing which includes institutions such as MUFG and SMBC to back a high voltage direct current, which is HVDC project, which is around renewable transmission projects in India. YouTube sensation Mr. Beast has bought a banking app. The YouTuber is acquiring a Gen Z focused banking app called Step, expanding his brand into fintech space. China has urged banks to curb their exposure to US treasuries. Chinese financial regulators have reportedly asked their domestic banks to limit their holdings of US treasuries owing to concerns around market volatility and concentration risk. And that's a wrap for today. Thanks for listening and hope you're making Viceversa daily a part of your day. As a teacher and as a former media practitioner, I noticed that there's little time to read through multiple coverages, and reading on the social media sometimes is often distracting. So, Viceversa Daily is an honest attempt to give you, that is the audience, some sort of a value. Do follow it on YouTube and on Spotify. You may also want to share this podcast among your friends. We'll meet in the next podcast episode tomorrow. Thank you and bye bye.